Airbnb has handed about $54 billion worth of value to investors who got in at its $68 IPO price announced yesterday. $54 billion in market value added to this company, which is now valued at over $100 billion on a fully diluted basis. Let's just take a step back and talk about how we got here in just about 20 hours' time. Morgan Stanley managed a hybrid auction system aimed at providing more data to the company for knowing investors' price limits. Based on those details, they did price shares at $68 last night, which then opened this morning, or I guess it was this afternoon, at $146. So who are the marginal buyers here? Much of it is retail. Fidelity showing Airbnb as the most actively traded stock today, with a very lopsided amount of buy orders relative to sell orders. And sources close to this one tell me that retail demand worldwide is here because Airbnb is available internationally, and it's drawn in a massive retail cohort. These investors have been watching the company boost its range and its price range and then price well above it. That signaled to many people that this is a company worth buying and buying with little price sensitivity. That's why it took so long for the stock to open today. Too many willing buyers without enough willing sellers until that price reached $146 per share. And Morgan Stanley felt that there was enough stability, enough price stability to really let it open at those levels, guys.
Yeah. Les, I mean, the retail component, the cohort that you just talked about, that's in and of itself what makes these things now, especially the household names, so difficult to price.
Mm-hmm. That's exactly right. You look at the company. If you're a banker and you're advising a company on where to price its IPO, you take all the information from investors. They've automated the situation to make it a little bit easier to assess where that actual demand is and where the price limits are. But at the end of the day, it's very, very difficult to assess from a disparate group of retail investors what their price limits are, what they're willing to pay. And there's just a different psychology involved with retail investors relative to institutional investors. And so that's a variable that it's almost impossible to manage that ahead of time unless there were some sort of automated situation that allowed those indications of interest to come in from retail investors. But even still, you may have a retail investor that changes their mind on that first day of trading, and it's difficult to really keep up with them and know whether they're going to buy it, whether they're going to flip it. There are just way too many variables at play to kind of pull that information in when making the pricing decisions. But there should be no surprise that there was retail interest in this one, especially after we saw what happened with DoorDash yesterday.
Yeah, no doubt about that. We'll follow it. What a big couple of days. Leslie, thank you. Kel?
Let's bring Deirdre Bosa into this discussion now, watching Airbnb shares, which interestingly, I mean, don't be fooled by the 119% you see on your screens there. This stock opened at 146. We're $2 above that level right now. Same thing with DoorDash yesterday. I mean, it basically traded flat from the opening price. Deirdre, you also spoke with the CEO of Airbnb. I would love to know his thoughts right now.
Yeah, I think he was even a little surprised by, I asked him, I said, what a wild year. And he said, oh, my God, yes, it has been. That was his first reaction. And as we've been saying all day, this is a company that was valued at $18 billion just a few months ago in the depths of the pandemic when their gross bookings fell off a cliff. Kelly, we've been talking a lot about the finances, and I think there's still some questions outstanding from the S1. But as we're seeing by how it's trading, investors have been willing to look past that. This is one of the oldest unicorns. So, of course, there was a lot of excitement around it, but I was expecting that IPO prospectus to address more. So it's worth spending some time on that because while this is a company that has shown EBITDA profitability in 2019, it was in spending mode, and we saw it, flip back into losses, which alarmed some of its early investors, right? The private investors before this thing went public. I asked Brian this morning if he would give us more on experiences, because while they scaled back on some of their projects, that's not the case for experiences. And this is seen as a more costly sort of ambition for the company. And he said, yeah, eventually. I also asked about the China business, which has been under some scrutiny. I asked if there was a point in which they would consider, rethinking that strategy or getting out of China like other tech companies have had to do. And he says, listen, we're capable of making difficult decisions. But I think just in those two answers, it really highlights that you can't just sort of put your head down in the sand and buy this company. There are some risks associated with it, and it's good to remember that as we see it trade at north of $100 billion market cap.
Shepard Smith here. Thanks for watching CNBC on YouTube.